Okay, let's give everyone like a minute or two. Settle into class. Can everyone hear me okay? Let's go to Bloom Place. My favorite time is class because I get to yell at you guys. Yay! Okay, Bloom Plays. I have my notes there. Okay. Today's class, I'm gonna aim to finish at 1 hour, but I think it might go over to like maybe 1:15 because I want to do some year-end comments, year-end, and some housekeeping as per usual, right? Housekeeping. Okay, where's the housekeeping stuff? Okay, get ready. Okay, so everyone can hear me okay, right? Okay, there's 2 people in live lessons. They're Tony for one and some other guy, ... They're in the wrong chat room. Do you guys see that? Let's move them over. And live lessons, there's another guy over there. Okay, let's move them over. All right. Okay, so today's class will be on candlestick analysis, and I think it's an important class because I covered a lot of material this year as we began, and I think candlestick analysis would be a good wrap up for the year, and it's an easy topic. Everyone knows candlestick, so this is a review for many, and will be a refresher for some. And I bet you there's some things I'm going to mention in this lesson that you never even heard of. Promise you that. Okay, and and candlestick analysis will be the last class in the scheduled classes for next quarter. There's going to be like 15 classes. Candlestick analysis will be the last class in those 15 classes. So if you miss this one, the next time for this class will be the end of the next quarter. Okay, so let's do housekeeping real quick. So I'd like to go through the mission and vision statement, right? Just to cover up what we're about, why our trading community is different, why our trading community is the best in terms of strategy, technique, skill, and chemistry between the lead traders, okay? So the vision of the United Trading Capital is to deliver the highest quality of care, fiduciary care, and superior returns across all disciplines of the capital markets in a due diligence, right? And prudent manner to inspire the next generation of professional investors, okay? We have the highest conduct, professional, okay? So the mission of the United Trading Capital is to become the world's leading network for institutional and proprietary trading through mentorship with a lifetime goal of independent wealth and continuous pursuit of philanthropy. Okay, we're always giving back to the community, hence philanthropy, independently wealthy. You're not going to borrow money from me because you're independently wealthy. Make sense? Okay, mentorship. If you ask questions, go ask TJ. He will mentor you. Does that make sense? Okay. So, quick. So housekeeping real quick. If you have questions, please put them in the comment box as I speak. So other people, you guys can technically speak to speak. You guys could speak to each other and have questions there posted there. Okay, but please mute your mic, mainly because if I'm going through a comment or going through something, I don't want to lose my train of thought, and it could be something critical. Okay, and at the end we will go through questions, and you guys will have your time to ask questions about the subject material and about anything really, because this is your time. What annoys me the most, and I get to say this because it's my class, is that you ask me a question while I'm trading. I have no idea. Okay, the market is moving too quick for me to sit there and answer your question. So this is your time to ask questions. Okay, so normally I would go through the candlestick analysis class right now, but I want to go through year-end comments with TJ and Vegas, who are the admins of the group, and TJ founded the group, right? This is just okay. So some things I've been noticing for voice is that we're not utilizing the chat room as often. We're repeating ourselves too much on voice. We're always saying A, B, C, D, Alpha, Charlie, whatever. Type it, right? Because the market is, you have to appreciate that the market is moving very quickly, right? So many things are going on. So you have to be considerate of, I would say, the main traders. So the main traders would be me, TJ, Zach, Vegas, Jim, sometimes Gabe if he's on. Who else? Who else am I might be missing a few, but you know who the main traders are, right? So please be respectful of them speaking. So it's highly important that we get to hear each other talk. If TJ is saying something, and you know Jim, he gets on and he whispers, it's important that I can hear what he's saying, right? Or that you could hear what Vegas is saying. But if we're trading the markets and it's like 30 minutes in and somebody's yelling about something else and blah, 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 it's going to get hectic and it's going to get emotional very quickly. Okay, so sometimes we might say something mean or some of us is upset, but that is the nature of trading. It is very emotional. So I just wanted to point that out. So just be mindful of that. Going forward, I think that TJ and Vegas will be working on a code of conduct, more so for consistency and efficiency, so that we know what to expect, right? So we're delivering a high quality product every day, consistent, right? So I talked about that. So okay, next class will be January 6th. That will be for onboarding. That's the next class after this. That's for the newbies who are just joining, and refresher. Okay, so I talked about the professionalism, the code of conduct, and respect for others. Okay, I talked about that. And okay, so growth. I want to mention growth really quick here. We're growing. Our community is growing very fast. So there's always new people joining, and please be respectful of them too, right? What I typically do is I just tell them to go watch the trading psychology videos by Mark Douglas, because they instantly will really about, right? It's not about putting all your money into one stock and pray to God that someone alerts it. That's not what trading is about, right? So I tell them, okay, if you're new, just go to watch the trading psychology videos first. So that's what I do. So you guys will come up with your own answers, right? And I'm going to make this comment. I actually haven't talked to TJ about this. So our group is growing. It's free, okay? But I want to deliver high quality service, technical trading, strategy, and fundamentals, all that. But it will be based on also merit, in a sense of if you are in the chat room and you are making mean comments to other people, putting other people down, I will ban you. We will ban you on the spot. I don't care who you are, right? You're not adding value. You're just yelling on voice, or you're just deleting comments, or whatever you're doing. It doesn't matter. But if you're contributing, you're adding value, you're respectful, you're helping others, you're going to stay. This is free, right? But we want the community to be high quality. Is that fair? So this is a warning, and I will talk about this in onboarding. If you act and we're all adults here, right? If you act out crazy and you talk about, sexual things or whatever on a consistent basis every day, we're gonna ban you because we don't need that in trading. Okay. So there, that's all. I've covered all that. TJ and Vegas, do you have any comments to add at this point before I go to the class?
No, I think you covered everything to the point. So we're all adults anyways. I think everyone understands. So that's great. And thank you.
Okay. But that's fair. You guys have to appreciate that, okay? Okay, so I'm gonna go into candlestick analysis. Okay, so I'm gonna assume that you guys did the homework that I asked. Okay, so I'm not gonna go through that. But I will. So I'm just gonna introduce really quick. Give me 1 second here. Oh, I haven't had dinner yet, so you have to give me 1 second. What am I doing here? Okay. Bear with me. What is going on here? So as you know, I learned candlestick analysis from one book. Okay. From there, I adapted everything else I learned. I learned it from the Steve Nyssen book. Okay. Steve Nyssen brought the candlestick study from Japan himself in the 1980s. Candlestick analysis was derived in Japan. Okay. So who else to learn it from the man who interpreted it and wrote the darn book? So I wrote it. So there was no other. I learned it from the primary resource, right? Okay, so maybe that's not important. Okay, so I just want to one comment about the history of the candlestick. Really important. So does anybody know what this is? Okay, so the original candlestick analysis came from Mainaka Homa, a Japanese rice trader in the 1980s, or no, not 19, sorry, the 18th century, I think, the 18th century. He went to the rice market and he wrote down the price, the high, the opening price, the closing price, how high it went, how low it went, right? We understand that's now the candlestick. This is what he did on rice paper, okay? So this is important. So Mainaka Homa did one thing. He did this to understand sentiment. Okay, so write this down. What I'm going to go through is three things. We're going to go through sentiment, context, and validation. Okay, of candlestick analysis. Very important. Mainaka Homa wrote this to understand the sentiment of the market. Okay, Steve Nyssen, when he adapted it, he put the sentiment into context. So when you read his book, he has examples he has GE examples, the 1980s, what happened to this one company. So he put the sentiment into context. Okay, so it's important that you understand that. Steve Nyssen put it into context so you can understand why the doji shows up in your support near this area, right? Mainaka Homa had no idea why it's showing up, but he knew that it was showing up. And validation, what's validation going to be about? Who knows? Take a wild guess what validation of candlestick analysis will come from. Exactly, volume. It comes from Anna Cooling. Okay, so at the end of the session, I will go through Anna Cooling's example of volume validation, right? So now we're combining, the class is special because we're combining the sentiment understanding of Mainaka Homa, the guy that originated, and then the guy that interpreted it, Steve Nyssen, to the lady that validated Anna Cooling. So, okay, so let's just one sec. I'm going to show you. I'm going to just teach you. Okay, just for completion's sake, that's the candle, right? We all know that, how it opens and closes. Who in the room has no idea what I'm showing you? because I want to skip this step. This is really boring. Okay. What's more important is what we call the range of candles, right? So you guys have to pay attention to this. It comes later in the analysis, in the review, when we technical analysis. Oh my God, I can't find a picture. Okay, here's a good picture. Okay, here's a good picture. Found one. Okay, here's a good picture. Okay, upper shadow, lower shadow, right? Upper shadow is called wicks. Lower shadow is also called wicks. These are called wicks, right? The real body, right? This is the substance of the candle. But this is important here. I want to talk about a thing called range of candles, right? Meaning if something is really bullish, right? Here, I'm going to quickly show a picture, right? This compared to something small like this, like, okay, look. So look at the range of the length of the candle. Oh, sorry, you can't see that. From the one on the left, look at the length. The range of this candle is very important in this trading versus something that I circled there. It's really small. Can you see it? The small blue one? Oh, I can't even see it. Okay. Whatever. It's just a small blue one, like the small ones, the small red ones. Okay, because this is important. Okay. Steve Nyson in his book, these range of candles, the way he describes it is the violence, the anger, the pressure, the panic. In a long range candle, there's a lot of panic and FOMO. Something is ripping 100% is going to have a full range candle, right? What happened? What was that stock? What? Look at the Watt daily chart. Okay, I'm going to apply it right now. I was going to teach it one by one, but whatever. I'm going to apply it right now. Look at Watt. Look at this range of candles. This is extremely bullish to the highest. This is going straight up. This is fear of missing out. This is panic. This is I can't wait. I have to cover. This is violent. This is an attack. The bears are getting attacked here. You guys will think, okay, why is he using these terms? In Steve Nyson's books, he uses the words because he describes the bears and the bulls as fighting each other. This is a war between them. Okay, you could see clearly this range of candles. Okay, right? Does everyone understand what I'm trying to say here? You could see the length. How? Okay. So that's something that you might have to just write down in your notebooks. Superbloom talked about range of candles, right? I need to study that some more, understand what he's trying to teach me. Fine. Oh my God. Okay. And then we can go into a topic called. Okay, look what's happening here. What is this? I can see by the wicks, selling pressure and buying pressure. You hear me and TJ say that all the time. Guys, I see selling pressure. It's not like I'm doing math. I'm not pulling out a calculator to calculate it. I can see it on the tape. People are dumping. The tape is all red. I can see it on the level 2. The ask is stacking. People are trying to get out of this thing. The selling pressure on these candlesticks, right? It's showing up in the chart, right? Look at this. Back at this candle, right? Look at this. See, look at this dump. I can read by this candle alone. This candle alone, I could say, guys, this is a panic sell. People are panic selling. It hit that gray line. That's the VWAP, right? It hit the gray line. Buying pressure came in. Does that make sense? Do you guys see look at the buying pressure picture? Isn't that what just happened there? Is that what just happened there? Explain to me, does that make sense? What I just said there. That's important that you could decipher that amount of sentiment, of value out of one candlestick. What happens right after? What happens right after on this chart? If I say, guys, this is a panic sell, people are dumping shares to get out. It hit the VWAP, it bounced, buying pressure came back, and what happened? Consolidation, right? People buying and selling, and then it starts to what? Trade sideways, and it starts to rip because instantly there was buying pressure there. Is that fair? I could tell why one candle. You got to be that good. I could tell by one freaking candle that's what's happening. I could say, bam, I'm knife catching at the buying pressure. Is that true? So you guys have to understand selling pressure and buying pressure. You guys have to basically memorize it. Okay. Okay. Now, so why is it that when we see the why is it that when we see the hammer candle show up, when we see the hammer candle show up, that we know that this might reverse? Does anyone know? This is about to reverse. This is a signal that this is a reversal, maybe. Because you can see it in the candle. There's buyers there pushing this. There's buying pressure, right? Is that fair? There's buying pressure. There's somebody buying here. Yeah, buying pressure has come in. Exactly. Right? Do you see that? I could, by one candle, I could read that. Okay, so that's important. So I'll give you another example. I'm going to show you just so there. Candlestick patterns, right? So that's very important. Understanding the range. I talked about the range, right? So I talked about the range and the wicks, right? So I talked about the body. If the body is full versus when the body is like a doji, the body is very tight, right? It's the range is small. Like here, what's a ticker that reversed recently? Oh, here's a good one. Rito, right? Look at Rito. Rito is a brand new chart. IPO'd like last week or 2 weeks ago, whatever. Look at the rate. Look at the candlestick. We could study this chart all day. We study this chart all day. Look at this chart. This chart is a gimme in terms of candlestick analysis. You could read the sentiment first out of this. Okay. Okay. Look. Let's focus here. I just want to hammer home the range of candles. The first range of candles is long. There's a panic sell there. People are dumping there. They want to get out. Look at the volume on that candle, on the first one on the left. The volume is a lot higher, right? Selling, they're dumping. Next candle over. The candle is now still dumping, but the range is smaller. It's tightening. The people dumping to get out is now getting pushed back up by somebody, by buying pressure. Okay, the volume now is decreasing. The number of sellers is just being exhausted. Bears don't have any more shares to dump. This has to eventually turn around. We just by looking at the range of candles, you can tell. Okay, and I'll prove it to you. I mean, remember this, technical analysis is an art because the guy that made it went to the rice field and wrote it on a piece of rice paper and then called it a science. And then some guy from the Western world took it back to the US and wrote it. It's a science. It's an art. It's not science. But look at the range of candles here. I'm going to circle all four of them. Look from left to right. This is important, right? Left to right. What's happening here? First candle on the left. Long wick at the top. What is that? Selling pressure. Is that right? Remember what I just taught you? Is that selling pressure? You guys agree that's selling pressure, right? The candle, the second candle, selling pressure again. Long. These guys want to get out. And then the third candle down, the buying pressure is coming back. I see buying pressure coming back. The range of candle, the length is shrinking. Next, the green, right? The doji is coming in. Now the buyers are fighting with the bears, right? They're fighting there. The bears, the bulls don't want this to go down anymore. They're sick of it. The bears are running out of stock. They're running out of shares to dump. How could you dump shares for 5 days in a row? You just have to run out. Eventually, what is that? That's a harami, right? You're going to learn that on your own. I'm not going to teach candlestick patterns today because that's another class. But harami, and then slowly a reversal comes. Is that fair? Is it possible that we could catch this reversal? Like just by looking at the range of the panic that's going on, the volume analysis that's going on? Let's look at the analysis, the volume. Because this all ties. Am I talking too fast? No, for the newbies, not you. Okay, look. Look at the volume. Okay, let's focus on the volume here. It validates. Okay, it validates. Volume here validates. So I'm moving into one thing. It validates, validation, volume validation. What's happening here? Selling pressure, right? And all of a sudden that doji comes in with buying pressure. That green bar comes in, right? that true? That green bar comes in. I really want to focus. You guys better. This why I really want to focus on this here. What's happening here? The buying pressure comes in. The buying pressure comes in, and the selling pressure. What? Yes, there's more people. They want to dump. Sure, but what's happening here? They're running out of shares to dump. The bears are getting exhausted here. They're tired. There's nothing else to do. What happens? The bulls rush in. They take over. The sentiment has changed, right? So I'm talking about sentiment now. I'm using volume to validate the candlesticks. Is that fair? Does that make sense? I'm looking at the volume here. I'm just saying, hey, look, what's happening here? What are these bars telling me? Right? It's critical. And this, you guys have, I'm not going to really focus. I might focus on this today, later on. I'm not sure. But these two candles here is very important. It's absorption. This is called what we call in volume analysis absorption. The selling pressure is being absorbed. There's 5 million shares being dumped, but there's enough buyers in the market to buy it all and then continue buying on the ask to let this rip. Is that fair? What I just said there is the buyers, the demand outweighs the supply. Okay, that's the proper term in technical analysis. Supply, demand outweighs the supply. Is that fair? Okay, so we talked about sentiment, right? Because I can tell. Okay, let's look at it again. Okay, sentiment. Focus on sentiment, because when you're doing candlestick analysis, it's always about sentiment, right? Sentiment. Okay, first thing. The sentiment here has changed. It was bearish. This thing was under attack. It congested a little. It was fighting in area consolidation. The bulls eventually won. The sentiment has now changed. Is that fair? And then we say volume has validated the candlesticks. Volume has validated, right? Volume has validated. And you guys are probably wondering, context. Why is context super important? Let's look at this chart again. Okay, so worry about buying pressure, selling pressure, right? Don't worry too much about the patterns, right? Because these are patterns. Like look up here. This is a doji, right? Let's talk about it really quickly here, right? That's the doji. When you see the doji, it's a reversal, right? Right? Okay. When you see what is this? What's this right here? What's this? Who knows what this is? When you see the tweezer top, tweezer bottom, right? That's what it's called, right? Reversal. Let me show you the picture so you guys don't. Oh, the Superbloom, he just likes to make up shit all the time, like he always says. Okay, right? Like this is look at this. This is candlestick analysis, right? This is a tweezer bottom. Okay, I know my candlesticks. I know all the pictures in the whole wide world. I know every single pattern, right? Great, good for you. Okay, so this is right. If you look at it, this is the candlesticks, and this is reversing. That we could tell because the volume has now changed, right? The volume has now validated. The sentiment has validated the candlesticks. Is that true? Okay. The only word I have not used there is context, and I have to teach you context. But up to this point, is it fair what I just said there? We are always looking for, has the sentiment has changed? If I'm bullish on a stock, am I gonna go and buy a stock that's under attack? Am I gonna go and buy a stock that's under attack? I'm like, this thing is dumping. Am I gonna I'm gonna go long, guys. When's a good time to go long when this thing is, you guys do that all the time to me. You guys say, guys, this thing just tanked 30%. I'm gonna get in. It's like, wow, okay. I'm gonna get in when the sentiment has changed and when it has been validated by volume. Is that fair? Okay. So now I'm going to go to context. Up to this level, up to this point, have I been clear about the word sentiment? Or do you guys want, we'll go through examples again. I have a few, don't worry. But I need you guys to understand these basics. Okay, so I'm now going to draw support resistance, okay? Support on resistance on this chart, okay? Right there. Price is getting rejected there. Prices, okay? So those are my lines, okay? Okay, these are my lines. Okay, I could tell right there. I could tell right there. Focus on, okay, right here. Why did I draw my lines there? This is not a class on support resistance. I assume that you guys know it. A few days back, price gets bounced off 752 on the left there. Price bounced off that line. It bounced off there. Somebody's buying there. Pushed it up, buying pressure, right? Buying pressure. I can see it, buying pressure. I can see in the volume, green bar, big green bar, absorbed by the selling pressure. I can see it. You guys see what I'm saying here? I can see it. That at least validates my understanding. New. Let's focus on here because I don't want you to, right? Okay, look at the volume on that bar. Is that true? Is that volume? Is that buying pressure? Is that volume buying the demand, absorbing the supply? Bounced. Okay, that's why my support line is there. Okay. So why is context important? Why did I draw my line? Okay, sorry. And here's why did I draw my resistance line there really quick? Resistance up here. Look closely. Every time moves up towards that 1002, 1028 area, some jackass is dumping those shares there. They're being mean. They're dumping their shares there. They don't want this to go up. Is that fair? What did I show you? Selling pressure. Somebody's dumping there. That's why Superbloom draw my lines there. Okay? So this is why context is now important. Okay? Context is critical, actually. Okay? After you understand sentiment, validation is critical. Candlestick is the most, write this down in your book, okay? Candlestick is the most powerful used in context only. Okay? So what happens near support and what happens near resistance is what we truly have to examine to study here. What we truly have to study here. Okay? We need to know what's happening at that support. Are the bulls winning or the bears winning? Is this going to tank? Because we can look at the volume, we can look at the dumping, look at the study of candlestick analysis, right? I'm on the daily chart. I will zoom in on the hourly chart, okay, to focus on, because we're going to step right into the mind of the bulls and the bears, okay? In context, this is critical. Candlestick analysis. Okay, I'm gonna post this picture now because I'm gonna forget. Okay, so this is important. The context. We only want to really study what's happening near support resistance. Okay, we have our tweezer bottoms, our bullish engulfings, bearish engulfings, our dark cloud covers, and all these other names, rising sun, right? Those are only critical in context, meaning near support and resistance. What is happening to the epic battle here between the bulls and the bears? Okay, so near support and resistance. So I'm going to do it again, because the biggest mistake in technical analysis and candlestick analysis is this. What's happening here? Why did I circle that doji there? It's not in context. This doji is right in the middle of congestion. It's right in the middle of nowhere. It is going up and down, and there's a doji in the middle of nowhere. Nowhere near support, nowhere near resistance. Are you gonna trade there? Are you gonna think that this is gonna reverse it? If actually, maybe I did draw that line wrong. Maybe there is another line right here in the middle. Okay, maybe that's why it doesn't make any sense. There is a doji there. Now it makes sense. I just realized that right now. There's a doji there because 88.72 is another area of support, right? Right across there. There's another area. That's why that doji, that makes sense. See, I picked that up right away. I'm like, that's not right. How come there's two dojis there, right in the middle there? Because they were fighting in that area, 872. There's an epic battle there. Does that make sense? There's an epic battle there. Let's really focus on this. There's an epic battle here. Okay, so there's an epic battle there. Okay, 2 dojis are showing up near that area. Okay, there's an epic battle there. So there's actually another area of fighting. Okay, but once the bears won, it tanked. Right after that doji, it tanked. Right, once the bulls won on before, it ripped. Is that fair? This is actually a good example of sentiment and context and stuff like that. No, that's pretty good. And this is not it. Look, right? Once they won against that, it tanked. Once they won against that, it dropped. Right? That's kind of good. Right? Once they won in those areas, it tanked. It continued to tank. Right? Okay. But so I didn't really explain context very well. So let me go to the 1 hour chart. Okay. So I'm just gonna say what I mean by context, and then we'll use some examples from Anna Cooling. Okay, what's a good example? Okay, so these are the lines I drew. Right, these are the lines I drew. I, in fact, don't care. Okay, look. I, in fact, do not care what happens in the middle here. This is what we call congestion, right? So that's very important. So that's what context is very important. You guys have to see where these candles are showing up in trading, right? You guys have to focus on where these dojis are showing up in trading. Here's avoid the tight congestion. Don't trade in these areas. See that congestion in the middle there? There's actually a lot of price action going on where that circle is going on. If you sit there and focus on, okay, I think a bullish engulfing is showing up here, right? If you sit here and say, okay, guys, I saw a doji with a hammer. If you guys sit there and say, oh my God, I saw a doji with a hammer with volume validation, it doesn't mean anything because this is out of context. The bears or the bulls are still fighting. We don't want to spend our time studying congestion. Congestion is panic people, emotional trading. There's no volume there. It's dry. It's a desert. There's nothing going on there. You really have to focus on write this down, how it breaks out, right? That's why the rising sun and what is it? Okay. Really? Does that make sense there? Maybe I didn't explain the context thing really well, but here's the picture that talks about it, right? The most important thing in this chart is the what? The word context. Read it. Patterns could be bullish or bearish depending on context. Where the bullishing engulfing shows up is critical. If it shows up near an area of validated support, yes, this thing is going to rip. But if a bullish engulfing shows up in the congestion, right? If a tweezer top, like, look at this. Like, let's just focus on this, just for the sake of argument, right? There's some sort of a doji showing up in there. That doesn't tell me anything. I don't care if the pattern doesn't mean anything. If it's out of context. Okay, so is that good? I think I butchered the context wrong, but you guys understand what I'm trying to say, right? Focus on where the action is happening, support and resistance. It is known in technical analysis, we are only buying at support and selling at resistance, right? And the truth is support and resistance are what? The exact same line. That's fair, right? We know that from technical analysis that support and resistance are the exact same line, right? Do I have to explain why? Technically, they're just trading at the same area. They're coming to meet at the same area to trade, basically, right? Right? So in the beginning when I first learned, and I learned bullish engulfing, and I saw the bullish engulfing in congestion, I was like, wow, I'm going to take an entry here. I'm a pro. Then I realized that I'm sitting there for 5 hours, and this thing is just still trading sideways. Is that fair? Context, sentiment, and validation. Okay. So never try to figure out a pattern if something is trading in congestion. Congestion is what? An area between support and resistance, right? I think that's good. I think you guys understand what I mean now. Okay. So I'm going to go through some. Oh, here's the part where I like to talk about. Look at when I first studied. So you guys don't think I'm look at this. This is something I posted on StockTwits. Okay. That's a depth of my understanding of candlestick analysis. And I drew my support and resistance and I circled those areas. And if you read my note, I talk about volume analysis and I talk about support and resistance, right? Volume precedes price. Guess where all the resistance is sitting at? I break that at that red line. I don't care what's happening in the middle. Only near those areas, those tweezer tops, at resistance, at the bottom, your support. Is that fair? I only care about what's happening at the bottom. What is happening there? Okay, so let's zoom in really quick here. So if I truly understood candlestick analysis, I could look at this really quick and say what? At support, the bulls are still being attacked by the selling pressure. Is that fair? I could look at the volume and say, look, look at the volume there. There's no bulls there. They're getting attacked still. They're scared. Those bulls are scared. They're scared. I'm scared for them, to be honest, just looking at this. I could see that they got attacked. They didn't even want to be there, right? Selling pressure. Is that fair? Okay, so that's a type of understanding. So, okay, before we go into the Anna Cooling examples, which will round out this whole class, let's go through this picture really quick. Wait. Did I have? Bear with me. I thought I had a better. No, wait. Before we go to that, I have to talk about one more thing. Very important. I almost forgot. So holy shit. Okay. So in Steve Nyson's book, he does things in threes, in groups of threes. Groups of threes. I want you to write this down. Groups of threes. The first candle on the left tells you what? The sentiment. Okay, bearish with some buying pressure. Okay, volume validated. There's a ton of action there. Okay, bearish sentiment. First one. At least we know that this is bearish. It's still under attack. Okay. The second candle over. It gives you the confirmation, the validation. Is this continuing on? Because remember, this is near the area of support. Is this still continuing on? So the first candle tells you sentiment. Okay, this is bearish. This is being attacked. The blue one, the green one tells you, is this a continuation? Is this a continuation of the attack? No, it's not. This is not a continuation of the attack. Is that fair? This is the bulls are stepping in. They're fighting back now. They are stepping in. So this is okay. So the question you have to ask is this a continuation of the attack? The continuation of attack or a reversal, right? Is it always like in trading? Is this going to continue or is this going to reverse? Questions we're always asking. Is that fair? So the second one, the second candle, is this a continuation? No, this is a reversal. This is the battle happening. Okay, reversal. Okay. And then the third candle. So groups of threes. The third candle. Okay, third candle shows you. Okay, it's being attacked. I see the bears are still attacking, but then again, look closely. Why did this chart eventually reverse? Even though the third candle showed that. It is because the attack, the volume, right? Look at the volume on that attack. On this attack, the volume on it was very low. The bears, only 4 bears came out to fight. Only 4 bears came out to fight. Is that true? And what came after? 10 bulls came out to attack. So this went. I'm talking like bears and bulls attacks because that's the way Steve Nyson describes his candlesticks patterns, right? The sticks are getting exhausted, right? They are fearful, is what he explains in his book, right? Because these are bears and bulls. Is that fair here? So groups of threes. is minimum. You kind of want to have at least figure out the sentiment. Is there the second candle will tell you, is this a continuation or a reversal, right? And then the last one will confirm it. If you see 3 candles in a row that are just bullish as hell and volume is increasing, you know that this should continue, right? At least it should, right? Okay, look. So just really quick here. Okay, look at this. Based on that, look at this. I know this is an easy one. This is a gimme. First candle shows long range, tons of volume. Okay, bullish as hell. The second candle, gapping up, still long range candle with actually no selling pressure. When it reached 33.50, there was nobody pushing it down. 33.50 was the very top of this candle. This is very bullish. Look at the volume coming in. It's higher than yesterday. More people are buying at higher prices. This stock is incredibly bullish. We're saying tomorrow, if we see another long range candle, we're going to expect this, like technical analysis wise, this is ripping till the hundreds. We don't even know where it's going because this is new territory, right? So in groups of 3s, and sometimes, yes, if you can get in groups of 6, 7, 10, and understand the whole picture over a longer time frame, it's even better. So what's a good stock? Let's do any. We've been talking about that really quick. Oh. Oh. Okay, so that's another rule of candlestick. Candlestick analysis is more validated. It's a more powerful tool on longer time frames. I don't want to miss that. Longer time frames. If you're studying your chart on the 1 minute time frame, you're gonna get nothing out of it. You're not gonna get anything. But if you're studying on the yearly time frame, and you're saying, "Oh my God, that yearly time chart over the last 30 years has been ripping," yeah, the entire market has been a bull market or whatever. Let's say, right? So longer time frame, Annie. Look at this. Just gonna do it really quick here, and then I'll go to the Anna cooling examples really quick. Anna cooling examples are the best, but I just have to make sure you guys know the fundamentals first, right? Because draw my support line area, right? There's a hammer there. There's a little hammer here, right? Look, I draw my support and resistance lines right away, right? Look closely there. I see a green hammer right in the middle. That doesn't bother me. It doesn't mean anything. This is still trading sideways in congestion. I'm not going to say this is a reversal because what happened? It moves up to resistance 240, goes right back down. Again, there's still selling pressure, right? It doesn't matter. I don't care what's happening in the middle. I only care. I almost like blank it out. Like I don't even care what happens there, right? But what do we notice? It keeps bouncing off support, right? And look at the volume here. Look at this. The candlesticks. It keeps bouncing off support. That it keeps bouncing off. And now that we understand what buying pressure is, there's buying pressure there. Every time it hits that number, there's somebody buying there. Look at those volumes, those green bars at the bottom there. What are all those circles? I didn't even look at those green bars at the bottom there. It correlates. There's somebody buying there at 230. Somebody believes that any is worth at least 230. Right? And look at what I'm circling the volume there. That's selling pressure. The sellers is not enough. They're running out. The bears are getting exhausted here. I can see it. Do you guys see the bears are getting exhausted here? They're running out of shares. And we know this, and then the bulls come back to attack. Is that right? The bulls, they come back right back to attack. Right? Running out of shares, buying pressure comes in, they run out, bulls come back, they attack, this rips. Is that fair? Can we predict this? We could. We could study the charts and figure out the sentiment, the validation, and the context, right? Context right by support. Okay? So that's that. I talked about the time frame. Longer time frames are important. That's why I personally use the 1 hour when I do swings at minimum, 4 hour, 1 hour, maybe 30 minutes just to figure out what's really happening on a daily basis. Okay, let's go through some Anna cooling examples now. Okay, wait, I'm just gonna make a quick note on this one too, really. quick, just for the sake of completion. This is important. This is an important chart because these twos show up a lot in trade in candlestick analysis. The couples, right? They show up a lot. So you have to remember these off by heart. You just have to remember them. I see a bullish engulfing near support. If the next candle is validated with a long candle with volume, I know that this is a reversal. This is going to rip, right? Bearish engulfing. If I see the bearish engulfing, where near the resistance, right? If the bearish engulfing shows up at resistance, then this is reversing and tanking. If the bearish engulfing shows up at support, right? At support, right? Support is breaking down, right? You need a third candle to validate to continuation, because this is two. But this is the secret of candlestick analysis here. You have to remember the couples, because you're going to show up and see one candle. It doesn't mean anything. What happens in the next candle, and then what happens does the market confirm it on the third candle, and how much volume comes in to confirm the third candle to make that continuation or that reversal. Is that fair? This chart is critical. If there's one thing about candlestick analysis that I want you to memorize, it is this chart. It is this chart. Who cares about the names? Understand the sentiment behind this. Okay, so now we'll go through really quick the cooling examples. Now that we talked about the range, the body, the volume, because I know that you guys, when you guys read the book, you guys probably didn't read the examples because you guys are lazy. I'm kidding. I'm just kidding. I'm cheesy. Okay. Okay, let's look at this picture really quick. What am I looking at? First thing I want you to notice is Anna Cooling, just by looking at the chart, look at what she's pointing out. Stopping volume candle, okay? She's literally, just looking at the chart, she's able to interpret the entire sentiment of this market, right? And she writes it down in her analysis. She's able to just say, stopping volume candle, right? And I'll give you an example why, and you guys will have to go back to the book and read it more precisely. Stopping volume candle means the market it's tanking, and somebody has stepped into the market to say, this is the price we're going to accumulate at, okay? So look at the volume here. Look at the volume, okay? And then the hammer shows up, buying pressure, and then it reverses. Anna Cooling is able to pick this out just by looking at the chart. She is able to read this. The market has stepped in. The big institutional buyer has stepped in, right? Look at the volume that validates. Look at the volume, the amount of volume coming in. This person is buying 10 million shares there. They don't care. I'm buying here. The next candle over is showing the hammer. The market sees that the buyer has stepped in. The market sees that. Now the retail traders are jumping in to buy it there as well, right? What happens to the next candle? It continues on. This is 3 candles. 1, 2, 3. Near support. Continuation, right? Is that fair? If you read her example, she goes through that kind of analysis. Okay. So what's important here? Right? Pay really close attention to this circle here. She could tell. I'm not going to go through detail. I'm just pointing it out so you guys can go back and flip through it. She could tell, looking by the candles and the volume, that the selling pressure is being absorbed. She could tell by that. That's how intuitive you need to be when you're studying your charts. You probably don't even understand what she's trying to say here, but for the sake of completion, okay? The reason why she's saying it's selling pressure is being absorbed is that, okay, first, look at the candles here. It's being attacked, right? We're saying the range of candles, right? The range of candles, just at the top, there's just 2 red candles, the range of candles. We have a short range of candles, and all of a sudden, boom, this thing is exploding downwards, right? Right? So boom, a panic, right? But look at the volume again. Look at the volume again closely. That's the little blue circle I'm circling again. I showed you that before earlier today. Buying pressure, selling pressure is being absorbed. Is that being absorbed? Do you guys agree that that's being absorbed? Or who's not seeing what I'm seeing? I want you to say yes or no. Who's not seeing that this is being absorbed? She could tell by the volume. I see it. You guys see it, right? This is critical. And then what happens later? Because the buying pressure is being absorbed, the selling pressure is being absorbed. This continues on. It moves up, right? Is that fair? This moves up. Breakout, see, and then it eventually breaks out with high volume, right? She's able to say, guys, okay, so, I know. So let's just take a side note. I only have a few examples at first because you guys will have to go back and study her examples. I'm just pointing it out. I know it's kind of cheating, right? 20-minute time frame. Look at KPay. Remember KPay when we traded? I instantly look at what did I look at? The 10-minute chart, 5-minute chart even. I don't care. Doesn't matter. 5-minute chart. No, let's do 20 minutes. Let's do 20 minutes. I'm cheating. I'm picking the time frame that fits my analysis. But when you do candlestick analysis, you have to look at multiple time frames anyway. So technically it's not cheating. Okay, what happens here? What happens? Selling pressure is being absorbed, right? Look at the amount of buyers compared to the sellers here. It doesn't matter who tanks this. It does not matter. There's just not enough guys with shares to dump this. Buyers will continuously keep the stock up. I said that in when we were trading this. I'm like, I like this chart. The selling pressure is being absorbed. I instantly looked at it and I said, okay, I get this. This is going up, right? Anna Cooling is doing the same thing. She instantly looked at the chart, says, okay, this is going right up. Okay, so that's the example. What other examples do I have from her here? Give me 1 sec. Breakout. Okay, so let's focus on this one. Right? Notice all the things that she's able to pick out from the candlesticks, right? That yellow box there, right? So in this particular example, she actually says that she was waiting for an area of consolidation, but it never showed up. So in this particular example, the congestion never showed up. But she was able to see at the bottom there, the bottom right corner there, I say clearly there's an early sign of weakness ahead, right? Weakness ahead. Yeah. So when she talks about the weakness, it's in. She's talking about this. This continues to tank right here. Buying pressure comes in. Okay. Look, this is what she's talking about right here. So click on that picture. Look, she's saying stopping volume. The hedge fund has stepped in there to stop this from tanking. Okay. What happens after it? You see that tweezer bottom reversal near support. Then you see all the buying pressure come through, right? And then this starts to move up. But this is an indicator. This is like she's reading the sentiment. She's looking for the context. She's validating using volume. Is that a good example there? You guys are seeing, she's looking at the chart and she's saying, bam, there's buying pressure there with the volume, the hammer that I'm circling there. She's like, bam, stopping volume right there. Okay, I'm waiting now. I'm waiting for my entry. And then there's bullish engulfings and yada, yada, right? Because I'm pointing these things out. What you guys have to pay attention to is how much is coming out of the candlesticks alone. She's able to pull out so much from it and validate these moves. Okay. So yes, I do want you to go back to read those examples to learn. I've read them multiple times. Okay. This is a good one. Okay, let's do this one. Okay, this is good. What's happening here? First signal of weakness. What is she pointing to? First signal of weakness. What is that? What is she pointing to? Selling pressure. And look at the volume that validates that bar. It's validated now. There's selling pressure. Now a few candlesticks over, what is she seeing? Weakness is confirmed. Near what? Resistance. There's context. This is being attacked near an area of resistance. It makes sense. This is tanking. And plus adding divergence and level 2 and tape reading. how could you, and being able to trade fearlessly with those videos, like how could you ever lose money is my question. That's why I'm always upset at myself. Like, why do I ever lose money if I can read this? Is that fair? First signal of weakness, you can read it. Selling pressure. I showed you that picture before. Weakness is confirmed. Okay. It's almost done. I don't want it's Sunday. What is it? Sunday today? No. Wait. A few more examples. Oh yeah, this is a good one. Okay. This is a really good one. Okay. I want you to focus on right? What is she saying? Look at this. Look closely here. This thing is tanking, going down your support. She looks at the volume, says, "There's no selling pressure here. This thing is 5 people dumped their shares. Okay, there's no selling pressure here. This thing is just tanking a little. No selling pressure. This will continue to move up." Right? That's what she's saying there. That's how volume will validate price action. Candlestick analysis is critical. The importance of volume here. What else? Pivot lows. Okay, I will end it with that one. Okay, no, so 2 more examples and then we're off. Then we could go enjoy the summer. Okay? Okay, look at this example. What's happening here? Classic trap move. Big operator selling here. What is saying here? I want you to focus on this. This is critical because you guys might be. This is a trick. Okay? This is a trick. This is a trick. This is why this is a trap. Okay? Very important here. So we see this move. We see this big blue candle come through. The big blue candle I'm pointing at. The big blue candle comes through. This thing is ripping 30%, let's say, for example, right? Look at the volume compared to the other bars. Is it validated by volume? Was this move a real move? Yes or no? Was this move a real move? This is not. This is 4 people pumping in a chat room. Guys, I think this is blah, 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 and 4 people bought this thing and this went up. Look, she's like, look at the volume. This is a trap. What happens? Selling pressure comes back. Not enough buyers come through. If buyers would come through, you would see a bigger blue bar or this thing, the next candle over the little red one, be blue one. This is a trap. What happens? This tanks. But the first signal is that candle was not validated by volume. This was a trap. You could read that in her example. It's a trap. She notices it because of the volume. Right? This is a trap. How do I know that? How does Superbloom know that to dump and not get in where I'm getting? Why did I get? You just have to wonder, like, how come I'm getting in and TJ and Superbloom is not getting in? And then how come when I get in, it tanks? Because first I didn't read the volume analysis book like I should, right? In the last example. Okay, last example, and then you guys can go. And then you guys can have questions, okay? Okay, so this is important here. I circled it in our notes. Oh God, it wasn't showing up here. Okay. She's trading. She's reading the candles volume, but she notices there's a potential period of congestion. You can never assume anything in trading. Anything can happen. There might be just out of sudden, you're like, okay, I'm pretty confident that this is going to hold support, and some guy in New York dumps everything, and you tank and you lose all your money because you don't have a stop loss. She basically writes this here at the last box here, the last circle in the last paragraph. There's apply a degree of leeway and common sense. Is that fair? I want you to understand that. Everything I taught you is an art. It's an art. Okay, so I'm not going to go through. She talks about pivot lows and pivot highs. A pivot low is theoretic. A pivot low is when the institutional buyer basically comes in with a stopping volume to stop this from tanking. I'm stopping it here. This is a pivot low. Okay. Pivot high is the hedge fund now stepping in to dump their shares. This is the first sign of distribution. Okay. It's actually, I'll just highlight it really quick here before we go. Pivot lows and pivot highs, because it's a chapter that a lot of people overlook, but it's critical because the sentiment and the value of candlesticks show up the same way when the buyers step in. The buyers step in, it shows volume. Boom. This candle shows a lot of buying pressure. Okay, this is not loaded. What the? Wait, I have her book saved. Oh yes, I have her book saved. Little, how smart I am. How smart I am. Right? So I'm just going to talk about, I'm not even going to, I could talk about it really quick here. Right? Okay, look, this is pivot. This is the pivot low and the pivot high. This chapter's in her book. The pivot low comes in. Look at the pivot low on the right, right? There's a major, look, again, she's smart. She's using the 3 candle system, just like Steve Nyson, who copied it from Monica Homa, right? Okay, look, there's the pivot low. It's under attack. There's selling pressure, right? It's under attack, selling pressure. Boom. The range of candles is narrowing. It's narrowing now in the second one to reverse that support. Okay, the volume will come in, right? Right? And then the third candle is to confirm the buyers are now stepping in. This is the first signal of accumulation in the book, the first signal of accumulation. Pivot high is the first signal of distribution. That is why sometimes I will say on voice, this is classic distribution on the 1 hour time frame, because I see this pattern. It's validated. TJ said there's divergence. I see the tape just bleeding. This is tanking. I'm saying, this is shorting. I'm shorting this piece of shit. You guys are like, how do I know? It's because I'm combining candlestick analysis, volume analysis, divergence, tape reading, level 2. If you combine all of it and you take an entry with a stop loss, that is the most confident you will ever be, that you can ever be in trading. Okay? Divergence, you guys might want to write that down, right? Divergence, tape level 2. And what is it? Tape reading level 2, market depth, right? And then some Mark Douglas. Okay? So that ends my class, right? We've gone through the material. We've gone through the examples. I've told you where to read the examples from Anna Cooling. Okay? So at this point, do you guys have any questions for me? And then, so no questions. You guys understand that clears my chart and look at a swing trade. You guys are actually, you know what I will do though? Because last time. Okay, wait, TJ and Vegas and Jim and some of their senior traders, do you guys have any comments on candlestick analysis? Like from your understanding of trade system, what, do you have comments?
Superbloom, I have a question.
Yes.
How do you deal with the volume analysis pre-market, which I'm trading futures, so it's a little bit different. How do you deal with price action pre-market, knowing when to get in at the open?
Okay, so that's a good question. For me personally, the reason why pre-market and after hours are dangerous areas of trading, okay, because they're dangerous because there's not enough volume there. Okay, there's a lot of gap ups and gap downs in after hours trading and pre-market because there's not enough volume, because there's not enough volume validation. So you actually have to depend on the tape a lot. The tape is printing out where you need to go in the level 2. Candlestick analysis might help, but you're never going to use candlestick analysis in pre-market. You could, but there's not enough time there. The pre-market is only 2 or 3 hours. How could you determine sentiment, validation, confirmation, and all that in the morning? against people that are just waking up, getting coffee, right?
Right.
That's why pre-market is, for me anyways, is mostly tape reading. I'm reading the tape. I'm seeing the buyers come in and I'm jumping in with them. And I hope to God this is going up. If it tanks, I'm stopped out. I have a stop loss, right? It's a gamble.
Right.
And in pre-market, this is position sizing. In pre-market, I'm never throwing 2,000 shares at a stock. No way. I'm only buying 500 or 100 just to get hey guys, I did this. Confidence building, right?
Right.
Is that fair? Is that fair how that works? Okay. Good question.
Yeah. Well, and something that I've noticed seems to, especially the commodities that I'm trading, seems to be more covering positions the day before than actual, trading a new position is what I've been seeing, what I'm assuming is going on. Would that be a good? Are you there?
You're trading the futures market, right? So I'm not. There's a lot of fundamentals there, supply and demand. So I don't know how. I don't know. I can't really answer that with a degree of confidence that I'm giving you the right answer, like who's covering what, and I don't know how the institutions are trading pre-market in the futures market, right? So I couldn't give you the proper answer to that.
Okay. All right. Thank you.
Okay. Do you guys have any comments, TJ, or questions? No questions. None. So
no, you covered everything perfectly.
Did I? No, I didn't.
Yeah, you did, and the rest of the things can be, read in the books that you mentioned. And we highly encourage everyone to read the books because it's one thing to watch a hour-long video, but it's another thing to go through the book and actually pinpoint where you need more support and help versus areas that you're strong at.
Okay. Okay. So wait, do you guys have any more questions? I want to go through this example really quick, but let's see who has questions really quick. Question. One of my two favorite Canadians. Okay, you help me out. Blah, blah, blah. Okay. Any? So no, the stopping volume, Chavez. You need to read it in the Anna Cooling book, right? And the reason why in this chat room, and unfortunately I'm the teacher, you have to focus on volume. It's the only thing I understand to be true. The only thing that volume, there's only one rule that I know, that volume precedes price. Volume validates price action. Volume reveals all truths. Volume cannot be hidden. Like, these are rules in the book. I've never heard of a rule that says MACD precedes price. I've never heard that. I've never heard MACD cross is a sure thing, but I could see the volume validates the price action and it quickly moves over because it shows sentiment. Okay, no questions? Yes, volume is a leading indicator. There's this only okay, wait, so here's another side note. In the Stephen Nyssen book, there's a few chapters. There's a couple chapters so the Steve Nyssen book is well written in a sense that the fourth chapter is about reversals. The fourth chapter, he talks about reversals right away. There's a reason why. Because in trading, we only want to know one of two things. Is this continuing on or is this reversing? Is that true? Is this continuing on or is this reversing? So chapter 4, he instantly talks about reversals right away. And then in the middle chapter, she talks about candlesticks, how candlesticks function with moving averages, oscillators, so RSI, the MACD, the stochastics, and volume. So in the Steve Nyssen book, he talks about how candlesticks reacts to that. I didn't really go over that topic, really, how it reacts. But I will show you one example really quick, just to end it, just to be. Right. Okay. So LMFA, right? I talked about this in class, in trading when we traded, right? Okay. And I'm going to show it again on the 1 hour time for, let's do 30-minute time frame. Okay. It's critical to understand how candlestick patterns. Okay. I'll show you the broad overview. The moving average, Steve Nyson talks about it when he talks about the move candlesticks with moving average chapter, right? So for this stock, LMFA, every time it breaks over the 50 MA, it rips. It rips. Every time it breaks down over it, it tanks, right? It gets rejected here, and then I knew for a fact that if it closes over, it will rip at the end. So notice how the moving average in this chart, the 50-day moving average is actually critical to the price action here. It's critical to this chart. It is the lifeblood of this chart. I instantly knew that when this chart crosses over the 50-day moving average, this is ripping, and if it tanks under it, the green, when it tanks right below it, it tanks down, and as soon as it moves over, see where I put that R there? It tried to break that 50-day there, and if you zoom in, so if I zoom in there on that chart, that's probably for me the biggest signal that if this breaks, it's gonna rip, right? This is stick really quick. That's getting rejected there, and it closes above this chart. It's bullish as hell. So I was just like, I remember that I holded it for like a couple hours. I was like, I know what's gonna happen. Okay, so if we zoom in. So if we zoom in on the candlestick analysis, bag holding it and it ripped. What's happening here? Right? If you zoom in there, all those wicks at the bottom that I taught you is the buying pressure keeping this up. They're keeping this up. And the low volume there, you could tell by the low volume that the sellers they're running out of selling pressure. Those guys bag holding, they're tired here. They're losing energy. Okay? And then reversal, and then it rips, right? It's just sentiment changed there, right? Fair? So those are the examples. Oh, actually, okay. No, I do wanna. Okay, 5 seconds here. I want to go through this really quick here. This is P top. This is P top. We're trading P top. Look at P top. What's happening here? Look at all those candles. Look at how bullish it was, right? Look at the range of candles. I just want so you guys can spot the range. The lengths of these candles are increasing. Are they right? The range of candles are increasing. They're increasing. So based on the 3, let's say 1, 2, and 3, they're increasing with volume. What's happening to the fourth one? Fourth one's got to be it's like Watt. Remember Watt? I said, look at these candles here. This is like if the third. This is P top, Watt, P top and Watt. Look at P top. 1, 2, 3. What happens to the fourth candle? It's just so bullish that the market just ripped. It just ripped that day. I don't even think it had news. It's just the sentiment is there. The volume keeps increasing. Okay. Okay, and then what do we notice here? This is probably the biggest sign. I'm still holding top. Right? Look at this. The day that it was red, look how much there's selling pressure there, right? But what do we notice? It doesn't break down. This is held there. It's still holding at that price, some level, but the volume is so low. This is selling pressure. It's just too low here. The next day, but it is running out of steam. See the volume here? It's running out of steam. As soon as the selling pressure will come in, this will tank really hard, right? And you could feel that in the sentiment of the trader too. Like as soon as the news will rip and tank, there's just no more buyers. They're no longer interested. Right? Is my guess. It's just my interpretation of this. right? You like Anna Cooling says, use common sense and a leeway, like have a room of margin of error, right? That's why we have a stop loss, right? And the next candle over to that red one, buying pressure is coming up to keep the price. But what's happening on the next day? We're losing volume here, and then selling pressure is coming back. What's going to happen tomorrow, probably? If buyers don't come in here to keep this price up and sellers start to dump, this thing will probably tank. This thing will probably be put in a red day. Put in a red day, right? Tomorrow. Like if we look at it on the 1 hour time frame, right? Really quick here. Just right? Squeeze our top, right? Selling pressure is coming back. On the 1 hour, you could quickly spot it right away, right? This is, look at the number of buyers moving up. This is the classic trap, isn't it? This is a trap. Yes, I figured it out. This is a trap, just like Anna Cooley's book. This is a trap. I could tell by the volume. This is a trap. Tomorrow, red day, right? Is my interpretation. Yes, if tomorrow something happens and this rips 500%, am I wrong? No, I don't care, because if it rips 500%, I'm in and I'm going to ride the momentum and make money too, right? But this is just my idea of it. I have an understanding, right? Is that fair? The class is done. 1.5 hours. That's good. Okay, no more questions? Okay. So let's meet again in the trading room. Yeah, I'm hungry. Okay, so I'm getting off voice. Tune in next time on the Bat Channel.